Today I'd like to have a look at the stock market and how it affects the economy. In the past 12 months we've seen falling share prices and many wonder how this will affect the economy. If share prices fall, then many consumers will see a decline in their wealth and therefore they will be less inclined to spend. They will cut back on luxury item spending. Also, firms are affected because sometimes they try to raise money on the stock market by issuing a share rights issue. For example, this summer, HBOS struggled to raise money on the stock market. So it's possible that lower share prices could also affect investment levels by firms. Thirdly, I think falling stock markets impact upon consumer confidence. If share prices are collapsing, it tends to negatively impact consumer confidence and consumer spending. So with these factors, falling share prices can cause lower growth in aggregate demand and contribute to a lower rate of economic growth. However, it is worth bearing in mind that falling share prices don't necessarily have a big impact. Many people who own shares are quite wealthy, and if share prices fall, it doesn't actually affect their consumer spending because it is not financed from the value of shares. It is, when people buy a share, it is money they can afford to lose. If there was a fall in house prices, I think the negative wealth effect would be much bigger because home ownership is much more widespread than share ownership. So when stock markets fall, it doesn't always cause lower growth. One example is 1987, stock markets fell 25%, but economic growth rates in the UK and the US continued to be quite high. So that's an example of where the falling stock market has no impact upon the economic growth. Also, I think it's worth bearing in mind that shares are falling in response to bad economic news. Shares are falling this year because we expect to go into recession, firms expect to make lower profits, and also there's the financial problems of liquidity shortages with banks having to deal with bad debt. So rather than causing a recession, the falling stock market is kind of a reflection of the deteriorating economic situation. So it's difficult to separate cause and effect, and I think here really that the stock market is falling because of the bad news, and it's not really the cause. The cause of the economic recession is much deeper than fluctuations in share prices. So yes, it does have a small impact on reducing consumer spending, but it's worth bearing in mind it's relatively small.